The Nifty and Sensex scaled new peaks on Friday, with the Nifty surpassing the 23,000 mark for the first time ever. The Nifty and the Sensex gained for the second straight week to record its biggest two-week gain in the last 5 months. Mid-caps, though, underperformed. Hello and welcome to Editors Roundtable, and on today's episode, we take stock of whether the election verdict will give a boost to FII flows. We tell you why brokerages are bullish on Vodafone Idea. We put the spotlight on the India, wire and cable companies. And of course, after scaling 23,000, what next for the markets? I'm Reema Tendulkar. With me are Prashant, Nimesh and Nigel. And we also have with us right here in our newsroom, Ravi Dharamshi, CIO of ValueQuest Advisors. Hi guys, this is a good Friday, right? When Saturday is a holiday.
You said what after 23,000?
What after, right? What next now that we've scaled 23,000?
50,000 on Bank Nifty.
Okay. That's one. Do you want to go for it? What next?
IPL gets over and World Cup starts.
That's safe.
That's a good one.
But I think it was a good week, right? Yeah. I mean, the market came back. Actually, the recovery, the stabilization happened the prior week. This week, of course, we just kind of continued from where we left off last week. Middle of last week, things started to stabilize. You know, all of the slight jitteriness with regards to, you know, all those voting turnouts, I think all that started to fade away. I think just to run you through the points, we kind of were up about 2% for the Nifty this week, which is not bad at all. I mean, the Bank Nifty was up about 1.6% or so. Mid-cap index ended 1% higher. The small-cap index was actually down a little bit, 0.75%. But records also came, right? I mean, as you said, Nifty at 23,000 and the Nifty Bank all-time high is just under 50,000, and perhaps that's coming soon as well, although that index has lagged. Now, FIIs also started, I mean, at least the selling intensity seems to be reducing. It's just a couple of days, but, you know, that seems to be the general sense. There were buyers of some 4,700 crores on Thursday, and that was the highest that we've seen in May so far. You know, just to put the number in perspective, in 2024 already, FIIs have sold some 1.2 lakh crores in cash markets. This is after they were sellers in 22, 23, 22, 21 as well, right? I mean, but that's not stopped the market from making new highs. The other thing is on the F&O side, the long-standing short positions, and it was reaching a bit of an extreme, not all-time highs, but it was reaching a bit of an extreme. That also got sort of covered very quickly on Thursday as we saw the data on Friday morning. They're still short, and typically what has happened in the last couple of times is, you know, when you reach an extreme and there is very large covering, you know, there is an overshoot on the other side. And all of this is, of course, happening around the time of the election results. So it makes it that much more interesting. 6 days to go for election results. The other point, of course, is earnings, which we will talk lesser and lesser of because the earnings season is coming to a close. But I looked at F525 EPS, full year Nifty EPS, and that now and how that has changed, not changed that much. It's still kind of projecting a 15% increase on top of where we are in 24. Where the sort of big gainers coming through in PSUs, and we'll ask Ravi whether PSUs is the best way to gain exposure if you are hoping for a post-election pop. The PSU index was up about 6%. Metals were big gainers, 5% of that index. PSU banks, 4%. Autos were up about 3% as well. And, you know, talk about stocks, it's a long list of defense companies which are up between 15 and 35%. The, you know, Kochi, Garden Reach, Mazgaon, BDL, BEL, HAL, you name it. And you also had a few other names. Idea was a notable one, which seems to be exhibiting some signs of life, really, so as to speak. Ravi, let me put that to you. What's the best way to gain exposure if you get what the market wants? I mean, which is continuity in a strong way. You think it's going to be PSUs, it's going to be something else? Right out of the gates, what's going to do the best in the most formidable way?
No, I think to continue with the points that you were mentioning about the FII positioning, I think the best is going to be the index. Like we saw yesterday, I think indices did very well, while the overall market was kind of on the sidelines. That just tells you the way the positioning in the market is. Just like the electorate, even the markets are very polarized. One side FII is selling and one side DII is buying. So the DIIs buying have been all focused on more mid caps and all those kind of stocks, while FIIs have been selling the frontline stocks like financials, banks especially, and IT services. I think that trade is just about to reverse. 2-3 things happening. Actually, the FII selling is more because of the fact that emerging market basket is selling off, and India has a 15% weightage in that. So it's not necessarily a call on India, but it's a call on the emerging markets. And the trade DM versus EM has kind of reached an extreme. Now, if that trade was to reverse, which we are probably seeing for initial signs in China, I think some of that positivity will also rub off on India also. That's counterintuitive. People think India versus China, but it's not India versus China, it's DM versus EM. And India and China are actually in the same basket. To the lesser extent, money flowing into China will eventually mean money will flow into India also. If that is the case, then the indices are the one that will do well. Because FII positioning, not only from F&O perspective, but also from cash market perspective, it's at a, in cash market is at a 11-12-year-old low, and even in F&O it was till 2 days back, 5-year short, highest short position or something like that. So I think pretty much all of us agree that the probability of the government changing is low. And if that was to pan out, I think a lot of money that has been waiting on the sidelines for the certainty to come back, I think that money will come back. So, I mean, it's like that one month back, I was speaking to some sovereign and they were like, might as well wait it out 1 month. How does it matter? They want more certainty. What matters to them is policy continuity and political stability. So, it's not that the government change actually might change the trajectory of the market. It might from a shorter term perspective, but from a longer term trajectory, it will still remain. Coming to your question on the PSUs, yes, the focus of the government has been on the capital goods side, more on the capex side, and that has tended to benefit a lot of these PSU sectors like defense. For all practical purpose, defense sector today in India is PSU. So I don't look at it from the prism of it's a PSU, but I look at it like I like defense as a space, and in that, which are the companies that I want to buy. If I like banks as a space, maybe I'll think which are the relatively better banks that I want to bet on. So that's how I think about it, and I think we should be in for a good move from here by the time election gets done.
Results and this RBI's dividend extravaganza has only boosted the government's coffers, which could result in more capex for the capital goods defense companies where the government has been spending.
So that's been a game changer. Though I don't think government is going to spend more. I think they have two options. One is government spends more. Other is they actually cut down on the deficit, which actually gives space for the private companies to do capex. That brings down the yields and everything. And I think that is the route that is most likely to be taken. You cannot create new infrastructure projects out of thin air. So that is going to be a challenge. It's more going to be on the managing the fiscal deficit front.
So the fiscal glide path. But let's talk about telecom, right? Particularly Vodafone Idea. And that was the stock of the day on Friday. And this is after UBS is betting very big. So the stock closed above 15 rupees. And just to put it in context, the FPO price was about 11 rupees. And now the stock is even higher than the price at which the promoters, the Aditya Birla Group, had infused money, 14 rupees 87 paise. Today, UBS has gone ahead and upgraded the stock to a buy and raised the target price to 18 rupees. And this is the highest target price on the street for Vodafone Idea, and perhaps the only buy call. There have been upgrades in the last 1 month on Vodafone Idea, but those upgrades resulted in the stock moving from a sell, underperform, to a neutral. So Citi, Nomura, Bofa, their target prices are all close to about 15 rupees. Two triggers: one, a tariff hike; two, a government relief. On the tariff hike, UBS believes that perhaps it's already priced in, but where Vodafone Idea can benefit is if a government relief comes through on spectrum or on AGR dues, and that may not have been priced in as of now. And if it comes through, it will benefit Vodafone Idea more than Bharti Airtel. So the risk reward is now more favorable for Vodafone Idea versus a Bharti Airtel. In fact, there are brokerages which have put out a bull case also on Vodafone Idea. Citi is at 25 rupees, Kotak is at 23 rupees. And also one more word, year to date, Vodafone Idea is down 6% when a Bharti is up 35% and Industars is up 75% and the Nifty is up close to about 5-6%. So Vodafone Idea has underperformed. There was skepticism whether they'll raise that money has come through. Now brokerages are betting on Vodafone Idea. You just need some pieces of the puzzle to fall through. One's a tariff hike and the other one is some sort of a relief coming through from the government.
From the government, yeah. Ravi, you have a view on telecom stocks?
See, from a historical perspective, which used to be a 20-player industry, now we have consolidated to 2.5-player industry, and that half player just got a lease of life. So it's going to be a 3-player. It's from that industry structure point of view, it's stabilized. Now there's not much market share shift happening now. So the only monitorable is where the money is going to be spent, how much money is going to be spent.
Should this be seen as a consumption play? Because that's now, it's become a huge consumption across category of people, right? I mean, today you may skip a lunch or a dinner, but you may not skip watching a TV or watching the data, right? So is that a consumption play now in India?
Keep an eye on your mobile bill. If your mobile bill starts moving from 500, 700 rupees to 1,000, 1,200 rupees, definitely telecom stocks are a buy. Okay. But I think that's the challenge. Not many the companies are not able to do that. And from an inflation perspective also, this will be a big inflationary impact. So not easy, but this is the only monitorable. If ARPU start rising, yes, we have a consumption play that
the thing
can do
here
very
is
well.
that, as we've often discussed, one can't do it. It has to be.
It has to be.
Or everyone can do it together. So there's no. I mean, because there are only 3 players, as you said, 2.5, whatever. Right?
Correct.
So,
I mean, now that some certainty is there that this player is going to survive, probably now more sanity comes in and people focus on making money rather than trying to push competition out.
So the focus shifts from land grab, subscriber grab to monetization, the return ratios. But let's talk about the other pressing issue, and that is the FI flows. Now, FI flows into India have been much lower than that of the other global markets. So not just being on the sidelines, they've actually been selling, barring the Thursday flow that we had. Nigel, do you think they'll come back into the elections? You've done some analysis.
Well, we just heard Ravi's view as well on it. And, there are a lot of views actually you get with regard to these FI flows. So let's put it in perspective and let's go across to the wall. So, yes, here in India, we are going to be tracking the flows coming into the market and how exactly the markets will shape up. But are the FIs waiting for the bigger trigger? Are they looking at this election result more closely? So let's put some data points on the board. If you look at the FI flows into India, in January, they were sellers, then they turned buyers. And the last 2 months, actually, they turned sellers yet again. And in May, the selling has got a little bit higher. So you'll say, well, they are selling, but maybe it's not an India-specific problem. They're selling emerging markets on the whole, which could be a possibility. But I said, let's just compare the last 2 months. That's April as well as May. If you compare the last 2 months, in terms of the flows, and you compare it with other markets, you compare it with the Korean market case in point, because they did see inflows in the last 2 months itself, while the other markets have seen some bit of selling, and India actually has seen the highest amount of selling at close to around $4.5 billion odd. And I'm just plotting a chart and seeing over the last 10 years or so, if you look at the holding in the Indian markets, it averages around 20% normally. Currently, we're at the lowest we have seen in the last 10 years or so. It's holding at around that 17 to around 18% approximately. So FI ownership in the Indian markets itself has come down drastically. And I'll tell you what, the base has increased as well because the Indian market capitalization has gone up. So that's why, in fact, in percentage terms, that number is looking, at the lower end or a little lower than what the average is at. So the big question is, we always ask, how much is priced in? How much of the good news is priced in? Well, if you're looking for a trigger and someone to push this markets further, the FIs could be the answer. With a positive election verdict and continuity coming into play, the FIs could be showing us the big money. Rhythm Desai, well, he put out a note, and he said that a lot of foreign investors, well, they're waiting for a better multiple to get into the markets. But he says that aside from any negative surprise coming out of the elections, well, he doesn't see any big negative trigger that's coming in there in terms of a de-rating. So let's wait and watch whether or not the FI flows come back in style. Well, let's go across to Ravi. Ravi, I wanted to ask you actually about the chemical space because you all have been tracking that closely, and we had a couple of managements this week itself. We had Vinati Organics, we had Galaxy Surfactants as well, and they are indicating that things could be on the upswing. What's your analysis of it?
So see, Nigel, our chemical industry had a fantastic upswing from 2014-15 to 21. That was a macro call on the entire chemical space doing well because China was actually retreating from the market. Post 21, China has actually come back in a strong way and they have been kind of dumping, and that has led to the numbers being disastrous for a lot of chemical companies. Yeah. But I think going forward, that excessive dumping from China is going to recede. The freight costs have actually gone up and that is actually leading to some bump up in the prices of various chemicals, and the spreads are beginning to normalize. So I think you are right. I think things won't get too much worse from here. But going forward, chemicals will not, in my opinion, will not be a macro trade. It will be more a bottom-up stock picking story. That's my contention.
So what is a macro call now? I mean, from a macro trade, which sector stands out for you?
No, so I think
because you picked up defense very well. You picked up, in the past, you've picked up even chemicals very well. From here, what is a big macro call?
So right now, it still feels like continuation of the same capital goods oriented stocks, power transmission oriented stocks. But at some point of time, I feel maybe 2 to 4 quarters from now, that wheel will turn. today completely consumption-oriented companies are totally out of favor.
Yeah.
And I think they are going to reach a point where it becomes very, very attractive, and that wheel will turn at some point of time. We are not able to precisely say when and what that happens, but that is one big change that I would anticipate at some point of time in next 12 months.
What kind of companies, when you say consumption?
Bottom of the pyramid,
Staples or-
rural, no, not only staples, even discretionary. For example, quick service restaurant, footwear manufacturers, real estate ancillaries, all those kind of companies should actually
And
start
what
doing
will
well.
signal that turn? I mean, whenever that happens, it'll be management commentary or something else. Maybe.
So, from a macro perspective, what I do expect, see, every time the last 2 terms this government has come, they have come with a very specific agenda. If you remember, the first 5 years were all about ensuring the bottom of the pyramid, the social security net, and getting all the infrastructure and everything in place, the connectivity, everything. Next 5 years were all about cutting the corporate tax rate, putting in money into the infrastructure, and reviving the investment cycle. I feel the next 5 years, the focus on the consumption, which has been totally missing till now, should come back. With the kind of money that RBI is giving them and the kind of collection GST is bringing, I think a lot of elbow room is being created for the GST rates to be cut. Now, I don't want to say it's going to happen. At some point of time, it has to happen. And I think even FM has made statements regarding that. We don't know the timing, but it has to happen, and that I think will give boost to the consumption-oriented sector. Finally, we should start getting more money in our hands. See, we have all felt wealth effect, but what is missing is the income effect, especially in the unorganized sectors. So that income effect has to come back, and that will be the revival of consumption.
Maybe personal income tax cut also, right? GST. Who knows? Possible, right?
I know, a lot of things. I mean, right now talking about capital gains tax gives us jitters because normalization will essentially probably mean that 1 year becomes 2 years in terms of long term. But I think there is a lot of scope for rationalization on the dividend tax, on the income tax at the higher end at least. Let's see. We are all hoping.
Valid points, Ravi, but we need to slip into a very short break. On the other side, we decode the week on the Lal Street, and we'll also put the spotlight on the India wire and cable companies. Stay tuned.